For his take on the markets, we want to bring in David Miller. He is Chief Investment Officer and Senior Portfolio Manager at Capital Capital. And David, thanks for being here this morning.
Great to be here. Thank you.
All right, let's talk through what we're anticipating this week. You got the Fed meeting. You've got that big CPI number that's coming. And then, by the way, after that, we get the PPI number. Jobs number threw things into a little bit of chaos last week. It makes people kind of question and wonder where we're standing. How do you feel about things?
Yeah, I mean, that 272,000 non-farm payrolls on Friday, that was a pretty big number. People definitely weren't expecting something that strong. But it definitely is probably a pretty good indicator that the economy is doing a lot better than people were thinking.
Therefore, as a result, that means great news because the markets are going to continue to climb, or is it a concern that the market is less likely to get that Fed put, kind of things where you see a rate cut coming from here?
I don't see a Fed rate cut coming from here. I think you look at the CPI numbers, they're just too strong. You look at the unemployment numbers,
but does
they're too strong.
If we don't get the cut, is it better to just have a good economy where things are continuing to hum along, or has the market been anticipating that there has to be a cut this year?
I think the market got that reaction Friday, and I don't think you really need the cut that people were anticipating anymore for the market to be able to hold up and do well. It's probably not going to be a rip-roaring market, but it can be healthy.
So you guys have $640 million in total assets. Where are you putting your money to work right now?
That's just one fund, isn't it?
The Catalyst Systemic Alpha Fund.
Yeah, you guys.
Yeah, so I'm CIO for the firm. We have about $9 billion. That fund's about $646 million. So in terms of that fund, what we're doing is extreme diversification. We have equity strategies, commodity strategies, currency strategies, bond strategies. You add the returns of all of them together, and that usually should probably get you a better output. So
diversification has been the play you guys have been moving with.
Extreme diversification, right?
What is extreme diversification?
So basically, most funds that I look at, they'll look at diversification as being like, we own 400 stocks. And 400 stocks is a lot to own, but it's actually zero diversification because it's 400 bets on the same outcome. If you think about it, if you can make money from stocks, but interest rates today are 0% in Japan, they're 5.5% in the U.S. Why not also borrow in Japan at 0 and lend in the U.S. and collect 5.5 and add the returns of multiple strategies together? That's our philosophy, but we go beyond just doing that with like equities and currencies. We do it with bonds and commodities as well.
You said the market doesn't need a cut. You mean in June, or do you mean in 2024?
I think even without a cut in 2024, even though it's...
Will there not be a cut in 2024?
I don't think there should be. If I were running the Fed, it wouldn't be my decision. I don't get how you get to a 2% inflation number if you're running over 3 now.
But you think there will be, but you don't think there should be?
I think more likely than not there will not be.
There will not be.
You think there's no cut in this calendar year? Just to pin you down here.
So I think it's 50-50 as to whether the Fed does it, but I don't think it would be a smart move. I think you're going to let inflation run hot if you do that.
But does this give you a lot more opportunities for extreme diversification if you have the ECB cutting rates and the Fed standing pat? All of a sudden, there's a lot more interesting things that you can find out there, I would assume.
Yeah, absolutely. There's always a lot of interesting things you can do if you kind of broaden your scope beyond equities or beyond bonds. And frankly, when the yield curve's inverted like it is, you can get paid to be short bonds. It's kind of a funky phenomenon. You don't normally think of being paid to be short bonds, but when the yield curve's inverted and you're shorting bond futures, that's what you're getting paid to do.
So what are your newest ideas in terms of different things that other people may not be thinking of and following? You guys are doing some pretty extreme things.
Yeah, so, the main philosophy that I think we have that's worked really well for us is something that would just be common sense when it comes to sports. You'd never see a coach for a team go out and say, you know what, you guys are great at offense, but defense is a waste of time. As long as you play great offense, you'll score 4 more points. No one would ever say that. And yet you see all these funds where they just have offensive strategies, but there's defensive strategies like trend following or commodity carry or currency carry where you can make just as much money as you can from offensive strategies. And if you add them together, you should be able to get much better total returns, but you should also get much better downside protection because things like trend following tend to work their best in bear markets. So that's kind of our philosophy is it really makes more sense to play offense and defense rather than choosing one or the other.
But I just mean, what's a new trade that you have on because of some of the changes we've seen? If the Fed hasn't cut rates, the ECB is moving on these things. You mentioned Japan is a very interesting thing. I mean, that's something that Buffett and Berkshire have been doing too.
So we're short bond futures, so that's been a big one for us, and it's worked well because you have a negative trend with bonds. You're also getting paid to be short bonds. If you look at the commodity space, there's a lot of commodities where you can get paid a lot for the storage costs of commodities with commodity spreads. So we're doing things like that, and that's been working
like
as well. Right.
I was just reading a story about that, where they've done that.
Yeah, I mean, if you look, copper's been very strong this year. The mining production's been pretty weak, but there's also been increased demand both on the industrial side and the military side. If you look to the commodity markets in gold, gold's had a great year this year. So there's a lot of good places to make money.